The chart is flashing a signal that every serious technical analyst covering XRP right now is pointing at simultaneously. It is not a bullish signal. It is not a bearish signal. It is something more specific and more urgent than either of those. The chart is flashing a compression signal. And compression signals have a very specific implication that most people in the XRP community are not discussing with the precision the current setup deserves. A symmetrical triangle has been building on XRP's chart since February of 2026. Descending resistance pressing down from above, ascending support rising from below, both lines converging. The apex of that triangle, the moment when the two lines meet and price is forced to break one direction or the other, sits at the end of May 2026 based on the analysis published by chart nerd TA on X. 2 to 3 weeks from today based on the current structure. And the most important thing about a symmetrical triangle is not which direction it breaks. The most important thing is the nature of the move that follows the break. When a symmetrical triangle breaks, it does not produce a gradual drift. It produces what technical analysts call a violent breakout, fast, hard. And in the case of XRP's current setup, with the Clarity Act Committee passage providing the fundamental catalyst, with the Senate floor vote and the presidential signature on the horizon, with exchange balances at their lowest since 2018, and with OTC supply showing settlement delays, the question of whether the breakout is violent is not the question. The question is which direction and what you do about it. Tonight, I'm going to walk through the XRP chart in full technical detail. I'm going to show you the patterns that the most credible chart analysts are pointing at, including the symmetrical triangle apex, the cup and handle formation, the key support and resistance levels, the Fibonacci extensions, the RSI and MACD signals, and comparative compression patterns from Tongcoin and Ondo that one analyst published as the closest structural comparables to XRP's current setup. I'm going to give you the specific plan for navigating the volatility the chart is signaling regardless of which direction it breaks. And I'm going to show you why the fundamental backdrop for XRP, the legislative sequence, the ETF, inflow trajectory, the supply compression is the context that makes the technical setup more consequential than it would be in the absence of that backdrop. Before I continue, this is not financial advice. I am sharing publicly available information for educational purposes only. Always do your own research and consult a qualified financial professional before making any investment decisions. Let me start with the symmetrical triangle because this is the pattern that Chartner TA's analysis has made the center of the XRP technical conversation, and that every serious chart analyst looking at XRP right now is incorporating into their view. The symmetrical triangle began forming in February of 2026, when XRP peaked near $1.60 and rejected that level. Since then, XRP has produced a series of higher lows from the support side and lower highs from the resistance side. Each rally has been slightly weaker than the previous one. Each pullback has found support at a slightly higher level than the previous one. The two trend lines, descending resistance connecting the lower highs and ascending support connecting the higher lows, are converging toward an apex that Chartner TA identified as sitting somewhere around the end of May 2026. Symmetrical triangles are classified by technical analysts as continuation or reversal patterns depending on the trend that preceded them. The trend that preceded this triangle was downward. XRP had fallen from its $3.66 all-time high in July of 2025 to $1.11 at the February 2026 low. That downward trend combined with the entry into a symmetrical triangle from the upside of a bounce, produces a pattern structure where chart nerd TA noted the statistical edge tilts slightly bearish. Slightly, not decisively. And catalysts have a habit of flipping that math quickly, as chart nerd TA noted in the same analysis. The catalyst that arrived on May 14th, the Clarity Act Committee passage with a 15-9 bipartisan vote, is exactly the kind of event that reverses the statistical edge in a compression pattern. Compression patterns are resolved by volume. The chart spent months building the compression. The volume that breaks it determines the direction. When the Clarity Act Committee passage produced a 6.6% weekly gain and a break above the $1.50 level that had been rejecting XRP for months, that move introduced the kind of volume expansion that breaks a symmetrical triangle to the upside. But here is what the honest technical picture requires acknowledging. XRP has not yet produced a clean weekly close above $1.50. As of the most recent data, XRP touched $1.52 following the committee passage and then pulled back to the $1.45 to $1.47 the range. That behavior, breaking a level briefly and then pulling back to test it as support, is the classic pattern of a breakout that is being validated rather than a breakout that has been confirmed. For confirmation, XRP needs a clean, daily or weekly close above $1.50 with sustained volume. Without that close, the triangle apex that chart nerd TA identified is still operative, and the breakout direction is not yet confirmed. The plan for this specific technical situation has two components. For bulls, the confirmation signal is a clean close above $1.50 on meaningful volume. Once that close occurs, the cup and handle pattern target of $1.65 to $1.75 becomes the near-term destination. The analyst CW, who published the trend line analysis on the street, noted that XRP is sitting right on the same trend line that served as the launchpad for the rally from under 50 cents to $3.66. The chart has two circled points where XRP touched that trend line and bounced. The first was in late 2024. The second is now in May of 2026. If that trend line holds again the way it did in 2024, the upper resistance line points to a potential target in the $25 to $37 range. For bears or for people who want to manage risk in a volatile environment, the level to watch is $1.43 to $1.44. The Fibonacci analysis from CoinMarketCap's AI price analysis identified a break below the 61.8% Fibonacci level at $1.43 as the signal that would invalidate the current bullish breakout and suggest a deeper retracement toward the $1.30 to $1.35 structural support zone. That zone is where Investing Haven and multiple other analysts identify the structural floor, the level below which XRP has not sustained on a closing basis since the ETF launch, created the permanent supply compression dynamic. Now let me walk through every key technical level, because the volatility plan requires knowing where the specific price points are. $1.50 is the current critical level. This is the neckline of the cup and handle pattern that has been forming since April 17th. This is the level that XRP broke above on the Clarity Act Committee passage news. This is the level that has been converting from resistance to support over the last two trading sessions. A sustained close above $1.50 on meaningful volume confirms the breakout and targets $1.65 to $1.75. $1.43 to $1.44 is the first support level below the breakout. This is the Fibonacci support level that CoinMarketCap's analysis identified. This is where the price needs to hold if it pulls back from $1.50 during the consolidation phase that follows any breakout. A close below $1.43 on meaningful volume signals that the breakout was a false break, and the symmetrical triangle's bearish statistical edge reasserts. $1.30 to $1.35 is the structural support zone, where multiple analysts have identified the genuine floor. Investing. Haven's analysis noted that XRP finds rock-solid support at $1.30. Crypto Ticker's May analysis identified $1.25 to $1.30 as the value accumulation zone for long-term holders. The structural floor is the level where the supply compression from ETF custody and the whale accumulation of 332,000 plus wallets at 10,000 tokens creates enough buying demand to absorb any selling pressure. $1.75 to $1.80 is the next major resistance after the cup and handle target. This is the 200-day moving average. This is the level that multiple analysts identify as the first major hurdle after the $1.50 breakout is confirmed. A break above $1.75 with the Senate floor, vote advancing, and the ethics provision deal closing would put the $2 target in direct view. $2 is the psychological resistance and the target that FX leaders' technical analysis placed as the consequence of sustained floor vote momentum. The analyst chart shows a break above $1.50, opening a path toward $2 as the next significant reference point. Now let me bring in the comparative pattern analysis, because this is the most compelling piece of technical context that has been published about XRP's current setup. On May 9th, an analyst using the handle bird on X published a chart comparison that put XRP's current compression phase next to the bear market compression phases that Toncoin and Ondo had experienced before their own respective breakouts. The comparison was precise. Both Toncoin and Ondo went through extended periods of compression where the price built higher lows and lower highs, tightening toward an apex the way XRP's symmetrical triangle is doing right now. Both assets broke out hard from those compression phases. Bird's conclusion was direct. XRP is next. The Ondo comparison is particularly relevant given that Ondo jumped 137% from its February lows following the JP Morgan, MasterCard, and Ondo Finance XRPL ledger transaction on May 6th. XRP was the underlying infrastructure that processed the Ondo transaction. Ondo surged. XRP, the settlement layer that made the Ondo transaction possible, did not participate in the same way. That divergence between Ondo's technical breakout and XRP's continued compression is precisely the kind of setup that Clever described as the price lagging behind adoption. The Ondo comparison says the compression has reached the point where the breakout is loading regardless of timing. The Toncoin comparison adds the longer-term perspective. Toncoin went through its compression phase while its network development was advancing but not yet visible in the public price. The adoption was real. The institutional interest was real. The price was suppressed. And when the compression broke, it did not produce a gradual recovery to previous highs. It produced a violent upside resolution that took the price significantly above where most observers thought it would go. XRP's network development is advancing. The adoption is real, as documented in the $3 billion in XRPL tokenized assets, the JP Morgan production transaction, the Goldman 13F disclosure, and the Clarity Act committee passage. The institutional interest is real in the 1.35 billion in ETF custody and the record whale wallet accumulation. The price is suppressed at $1.47 in a chart that has built a compression pattern for 3 months, and the apex of that compression is arriving at the end of May, coinciding exactly with the Memorial Day deadline that determines whether the Clarity Act Senate floor path advances before the midterm calendar takes over. The chart and the fundamentals are synchronized, not by coincidence, by the structure of how institutional adoption cycles work. The supply compression that produces the symmetrical triangle on the chart is the same supply compression that Claver documented through OTC settlement delays and exchange balance declines. The apex that chart nerd TA identified at the end of May is the same window that Loomis warned is the rare Washington alignment that may not last long. The technical pattern and the legislative calendar are converging at the same moment because they are two expressions of the same underlying reality. Now let me give you the specific plan for navigating the volatility that the chart is flashing, because a plan that does not address the bearish scenario as well as the bullish scenario is not a plan. It is cheerleading. The bullish scenario plan. If XRP produces a clean daily close above $1.50 with meaningful volume, the confirmation of the cup and handle breakout is in place. The plan is to hold existing positions and look for the $1.65 to $1.75 target range as the near-term destination. The Senate Agriculture Reconciliation announcement is the next fundamental catalyst that compounds the technical breakout momentum. If the breakout closes above $1.50 before that announcement, the announcement becomes a catalyst that extends the move toward $2. Position sizing and patience are the disciplined requirements. Volatile breakouts from compression patterns frequently produce a test of the breakout level before continuing. A pullback to $1.45 to $1.48 during the confirmation phase is normal and not a failure signal as long as price does not close below $1.43. The bearish scenario plan. If XRP fails to hold $1.50 and closes back below $1.43, the symmetrical triangle's bearish statistical edge is reasserting. The plan is to recognize that the committee passage did not produce the volume-confirmed breakout needed to overcome the 3-month compression pattern. The next support zone at $1.30 to $1.35 is the level where the structural floor exists and where the fundamental supply compression from ETF custody and whale accumulation creates buying demand. That level, if reached during a pullback from a failed breakout, is the level that multiple analysts have identified as a higher probability accumulation zone than the current $1.47 range. The third scenario, which Chartner TA specifically acknowledged as possible, is the drift to the apex without a clean break in either direction. Price chops sideways. Volume does not expand. The symmetrical triangle reaches its end of May. Apex without a decisive resolution. In that scenario, the breakout is delayed rather than cancelled. The fundamental catalysts, the Senate floor vote, the presidential signature, the bank authorization window, do not disappear because the chart did not break cleanly by the apex. They delay. The plan in that scenario is to hold positions with the understanding that the compression that did not break at the apex will break when the next fundamental catalyst arrives, which is the Senate Agriculture Reconciliation merge text release in early June. Let me give you the investment calculator because the technical plan requires concrete numbers. At $1.47, $1,000 buys you approximately 680 XRP. At $1.75, the cup and handle target that a confirmed close above $1.50 produces, those 680 tokens are worth $1,190. At $2, the FX leader's technical target following floor vote scheduling momentum, they are worth $1,360. At $2.08, the breakout target that the street's analysis cited for a confirmed move above $1.50 on the analyst's CW chart, they are worth $1,414. At $2.80, Standard Chartered's near-term institutional consensus, they are worth $1,904. At $5, the lower bound of the fundamental scenario year-end target, they are worth $3,400. At $8, Standard Chartered's bull case, they are worth $5,440. At $5,000 invested, multiply every number by 5. At $10,000, multiply by 10. At $25,000, multiply by 25. The chart is flashing compression. The apex is at the end of May. The Clarity Act Committee passage introduced the first major volume catalyst in 3 months. The confirmation close above $1.50 is what turns the committee catalyst into a confirmed technical breakout. The Senate floor vote is the next catalyst that produces the sustained volume expansion that breaks the symmetrical triangle conclusively rather than tentatively. This is the plan. Watch $1.50 for daily close confirmation. Watch $1.43 for breakdown signal. Watch the end of May for the apex resolution. And watch the Senate Agriculture Reconciliation announcement for the next fundamental catalyst that the technical setup is loading for. The chart is flashing volatility. The plan is the answer to the warning. Macro storms pass. Infrastructure lasts. Smash that like button. Drop your call for the symmetrical triangle resolution, upside or downside, and your target in the comments. Let's see what this community is reading on the chart. Subscribe and hit the bell. When the apex arrives and the breakout direction is confirmed, my breakdown drops within hours. The compression is loading. The apex is arriving. You want to be subscribed when the resolution comes. See you on the other side.